Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily update on the Nasdaq 100 or the NDX, one of the most liquid index ecosystems in the world, made up of the top 100 stocks listed right here on the Nasdaq stock market. Joining me this afternoon for technical level update on the Nasdaq 100 is Brian Joyce, managing director on Nasdaq's market intelligence desk. And Brian, before we get into Nasdaq 100 levels, I really want to focus on value and what that means in terms of the market overall, because the big story over the past week has been positive vaccination news, right? And that value rotation trade coming out of some of those Nasdaq 100 stocks.
Yeah, absolutely. So we saw on Monday on the Pfizer announcement, the entire market spiked higher, but growth kind of quickly turned around and traded down, and value really took off. And really, the two main sectors in that bucket are energy and financials. They're up about 9% and 5% of the last 5 sessions. They've been the worst performing groups, and they've gone higher as interest rates gone higher. Those two tend to be positively correlated. Just because value, had been underperforming for so long, this is actually now the third straight month value is beginning to outperform growth. I still think it's too early to get all giddy about value. And I could show you a few charts as to why I say that.
I would agree with you, Brian. We should definitely pull up those charts, because we have to confirm to see if this is something that's a shorter term trade, which might make sense, or if it's something for the longer term, because the fact of the matter is we have a number of months to go through until vaccinations are available at mass scale and it disseminates among the population. I mean, we're dealing with breakouts, exploding exponentially, and we're seeing cities put restrictions back on. So, it might be, the question is it a shorter term trade, or is it something that might have longer term legs?
Yeah, exactly. The working from home trade is certainly, not gone. The value trade is the return to work, the economy reopening, so to speak. And as you noted, because of the big spike, it's not just being isolated in a couple of states, like we saw largely in the early part to mid part of 2019. It's kind of throughout, and the shutdowns, the lockdowns are only increasing day by day. New York City, I think, is getting set to close its schools. You mentioned to me earlier Chicago as well. So those are reasons to be concerned if you're looking at the value trade. And so this is a daily period chart of the value index, and as you can see on Monday, this is the breakout from a multi-month range, about 5 months or so. So that's what got everyone bulled up and giddy about the space. But if we look at the longer term weekly period chart for value, we could see, it broke out of that recent 5-month range, but look what it's running up into right now. This is the weekly high up here, and these are coinciding with highs that we saw in the second half of 2019 and in the late part of 2018. And that's around the 1271 level for the Russell 1000 value index. So that's a significant resistance level, much more significant than say this dotted line here, which is what we've been up against and breaking out from this week. We've been up against it since mid to late June. So, the longer term resistance level is the more important level to watch. And we are seeing that the value index is now pulling back from that. So doesn't mean that value is going to roll over, but it could mean certainly that value just needs a lot more time to get through that level. So that's one of the reasons why I think, we should be concerned about value in the short term, and may not, continue to run up from here in the coming days and weeks. Here's a ratio now of value over growth. And so when the line is trending down, the numerator is underperforming. So value over growth trending down shows value underperforming. So value has bounced back. It's outperformed now. This is the third straight month. But as you can see, this chart is really nothing attractive about it. We're still well below that 40-week moving average, which is synonymous with the 200-day. So value is seeing a little bit of a bounce right here, but certainly nothing that is telling me that value is taking over the leadership baton for any extended period of time. It has a lot more work to do. And then finally, we mentioned earlier that the 10-year Treasury yield has been spiking higher. That tends to be good for value stocks. Here is the spike that we've been noticing. It broke out of this range. It's been in for the better part from April to present. It sort of started moving above around 78 bips, that resistance line, since late October. Broke out above the 200-day average this week on Monday. It's been seeing some temporary breakouts and pullbacks over the last 2 or 3 weeks. But it seemed to here that on Monday, maybe we were now seeing a longer lasting move. But again, when we look at the longer term chart, what's it running into? The declining trend line. And let me just change my scale here. But this longer term trend line going back to late 2018, we could see connecting the highs from 18 and early 20, late 19, we're running right here into now a cluster of resistance. And so if the 10-year is going to peak here and begin to pull back into this sideways range we've been in for the last 6 or 7 months, that to me is saying that value is going to hold back as well. So I think it's, my, I guess, takeaway is that it's still too soon to say value is ready to outperform growth for any considerable period of time or sizable move. Growth, I still think, has the hand.
Yeah, well, still worth the trade though. Something for everyone in this market, right? So Brian, let's take a look at the Nasdaq 100 levels for a quick update.
Yeah, and so here's the Nasdaq 100, the weekly period chart. We did make our high back in September, and we've, just holding now into a sideways range. Right now, we're about 4% away from the highs, and so that's certainly very constructive. We're working off overbought technical readings. Back in September, we hit about 77 on the weekly RSI. And we've been holding, very well into that bullish zone. We bottomed around 55 on the weekly RSI. If we want to zoom in a little bit and look at the daily period chart, we could see, I would note that this week's high on Monday stalled right exactly at the high from early October. So that's the level I want to look at in the near term, about 12,200, 12,210 on the Nasdaq 100. And if we get through there, then we're looking back at the year-to-date highs, 12,439. Those are the key levels above that I think is key to look out for.
Brian, let me ask you a question, because the pattern looks, you can even see it better on the chart that you just had on before this one. It feels like for 2020, yeah, this is the chart coming up, that it's either been either all the way up or all the way down in terms of action on the charts. This is the first time I can see, but fundamental analysis is a little bit more of my wheelhouse than technical analysis, but this is the first time I can see where we've had a considerable amount of time where you are in a range. Does that mean anything to you versus what we saw for, virtually the rest of 2020?
Well, what I would just say is, the weekly candlestick going back to the week we made the high in early September, this was the bearish engulfing candlestick where the body of this week's range engulfs the prior week's body. And in particular, you had pretty long tails on either side. So a lot of uncertainty there, a lot of violent, volatile price action. That doesn't mean we have a top at hand. It just indicates that what's likely is that the uptrend has ended, and it could be a top, but it could also just mean a period of sideways consolidation before we then resume the upside. So that remains to be seen how it plays out. If we break the low of this sideways range, which is down at almost 10,700, 10,677, then that to me is the concern that, okay, maybe a reversal is at play, and the primary trend is to the downside. But that is not the case right now. We're only 4% away from the highs. We're in a sideways range. We're closer to the top of that range. And as we're going through this process, we are working off those overbought technical readings. And so this to me is simply common technical price action. There's certainly a lot of headlines. We had the election, we have COVID, we have earnings, which, have actually been coming in quite well versus what expectations were. So, there's a lot of cross currents here at play. And so that's why technicals a lot of times can be very valuable if you're just following pure price action. This tells you that, you want to stay in the game. You want to have your exposure to growth and to the Nasdaq 100. It's been the outperforming index for at least the last 3 years. You can even go back as far as 10 years. It's outperformed all the major indices here. So we're in a sideways consolidation. Fundamentals maybe are concerning with the lockdowns, but maybe that's a benefit to the Nasdaq 100 and why it's holding up so relatively well, and as well as an absolute basis.
Brian, great stuff as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.